Folks, Dan Frio here, the Mortgage Update. Today is August 28th, 2019, and if you follow the channel, you notice we focus right here. And green is good. That means bond prices are up and yields are down. Okay, so let's recap what's happening in the market. I'm going to try to incorporate some things going further. So when you log in on a daily basis, we're going to caption, what's going on in the economic news that's affecting stocks, bonds, and mortgage rates. So let's get to the news first. Let's scroll down here. Here's what's actually happening, and these are several areas that I go to for my information to compile for you. So the global markets are basically slowing down. There's economies out there that actually have negative yields. People are putting their money in investments that actually have a negative yield, a small negative yield, because they think if they invest in anything else, it's going to be a big negative yield. Okay, so that's one of the things that's happening. So the global slowdown is causing chaos. The China slowdown because of the tariffs and the trade wars, that's playing havoc on the whole world. Right now, you see in the UK, Brexit is an issue, where the Prime Minister just halted all of the discussions or all of Parliament until they figure out something there. And then you have, basically the world economy starting to really slow. So that's what we're seeing here. So if you've watched some of my other videos, yield curves and things like that, you understand now a little more on why people, they're fearing the markets, they're fearing the future, they're fearing all this other stuff. So they're willing to say, you know what, I'm just going to put my money in long-term bonds and just be safe for the next 5, 6, 7 years. I don't want to take a huge loss in the market, any which way market, and I can't sit in cash. So I want a little bit of a yield. So let's get to what happened in the markets today. If we go here, we saw the stock market with the Dow Jones was up 258. Good day for the Dow. NASDAQ was up and the S&P was up. But you're seeing the Nikkei, which is the Nikkei, and other areas in the world that kind of drop some. Here, this also gives us our yields on treasuries. But let's go down through here. You're going to see, here's all the headlines right now. And that's why the other day I posted, what's the yield curve and what's the inverted yield curve. We went over those things. But you're going to see a lot of headlines in regards to the world economy and inverted yield curves and such. So, and everything is targeting this, the trade war. The trade wars with us and China, the two biggest economies in the world, are creating havoc all over the place. As we slow and and there's tension there and in other parts of the world, it causes chaos, it causes fear, causes people to hold back on their money. They quit investing, they put in safe havens. So that's what's happening right now, and that's why you're seeing yields on bonds and fixed income all over the world moving, money moving into those areas, thus causing the prices to go up and the yields to come down. So let's get on to what's going on into the mortgage rates today. Again, we saw an uptick of 11, which is good. We'll show that chart here. We're still in the Fibonacci range, the floor and the ceiling. We're hitting the ceiling here soon. I don't think we're going to surpass that. I think we're going to trade in this range for a while. That's why my recommendation is still to cautiously float interest rates. Now, unless you're closing and have to lock in, just keep floating for now. And again, I'll post an alert if I see something major. I'll tell you to lock in quick. If you notice, I put in additional yields here so you can get what's going on in short-term yields. So the 1 year, the 2 year, the 5 year, the 10 year, and the 30 year. Here's that inversion. You have yields on the 1 year at 1.75 and yields on the 10 year at 1.4. So you're saying, why wouldn't I invest in the 1.75? Again, because you're thinking you invest in at 1.75 yield. Next year when that expires, you might only be getting 1. So why not just that's the thinking right now. So people are saying, you know what, I'll tie my money up in, a 10 year and get, I'll go out as long as I can to get that yield, so I know I'm at least getting something. So again, the recap of the day, there really wasn't much data out today. Tomorrow we have some indicators coming out, nothing that really volatilely move the markets. It's still basically a Twitter or Twitter war out there, as well as Brexit now is playing a concern on the markets. So hope you found this informative. If you do, please don't forget to give me a thumbs up. Please subscribe down below. Click the bell so every time I do post, you get an alert so you know when I'm posting, and you can check that out. I'm trying to make these sweet and simple and most informative as I can. So God bless. Have a great night, and I will see you tomorrow.